Welcome back, everyone. Today, we're breaking down why Bitcoin has hit its highest price in a month, just shy of $64,000. What's driving this surge? Well, we've got several key factors at play, including interest rate cuts from the Federal Reserve and renewed inflows into Bitcoin ETFs. So buckle up as we dive deep into how these events are reshaping the crypto landscape. Bitcoin began the week on a high note, reaching a one-month peak. On Monday, we saw Bitcoin near $64,000 before slightly retreating. This climb has been largely fueled by the Federal Reserve's recent decision to cut interest rates by 50 basis points, which frees up liquidity for speculative assets like Bitcoin. One of the most exciting developments in the past week has been the inflow of funds into Bitcoin ETFs. After 2 weeks of outflows, BlackRock's iShares Bitcoin Trust saw renewed investment, signaling renewed confidence. Inflows into these ETFs often reflect institutional interest, which is a key driver of Bitcoin's momentum. Beyond ETFs, the Federal Reserve's interest rate cut last week is perhaps the biggest influence on the market right now. Lower interest rates mean more liquidity, which often gets funneled into riskier assets like Bitcoin. Analysts are expecting the Fed to cut rates even further, with up to 125 basis points of cuts anticipated by the end of the year. But we're not out of the woods yet. This week, we've got several key events on the calendar. Fed Chair Jerome Powell is scheduled to speak later this week, and we're also expecting the PCE Price Index report, which could influence future rate cuts. If inflation ticks up, it could slow Bitcoin's momentum. It's not just the Federal Reserve. Central banks in Switzerland and Sweden are also expected to cut interest rates, which could add further fuel to Bitcoin's rise. These cuts reflect a global trend of loosening monetary policies, which bodes well for the entire cryptocurrency market. While the outlook is mostly positive, there's still some risk on the regulatory front. With the U.S. election cycle in full swing, crypto markets could face regulatory uncertainty. The SEC's stance on Bitcoin and other cryptocurrencies could affect market sentiment, especially if new restrictions are imposed. While Bitcoin has surged, altcoins have had a more mixed response. Ethereum rose by 2.7%, but Solana and XRP have barely moved. We're seeing some hesitation in the broader market, likely because traders are waiting for more cues from the Fed. And of course, not everyone's jumping on the Bitcoin bandwagon. Peter Schiff, a well-known gold advocate, recently pointed out that gold has hit another record high. He argues that Bitcoin's volatility makes it less reliable as an inflation hedge, but for those looking for bigger gains, Bitcoin remains the go-to asset. From a technical perspective, Bitcoin is approaching a critical resistance level around $70,000. If we break through, the next target is $75,000, but a pullback to $60,000 is also possible if we don't see enough buying momentum. In other news, Riot Platforms and Bitfarms have reached a settlement in their ongoing dispute. Riot is now Bitfarms' largest shareholder with around 20% ownership. This consolidation could have big implications for the Bitcoin mining industry going forward. So, there you have it. Bitcoin's rise is being driven by a combination of Federal Reserve policy, ETF inflows, and growing institutional interest. But the path forward is still uncertain, with plenty of potential risks on the horizon. As always, stay informed and make sure to subscribe for more updates on Bitcoin and the broader crypto market. Thanks for watching, everyone. Make sure to follow me on social media for real-time insights and let me know in the comments, where do you think Bitcoin is heading next?